What's up, crypto family? Welcome back to Gold Rush Crypto Daily. I'm your host, and we've got some absolutely explosive XRP news to break down today. We're talking about a game-changing SEC filing that just dropped, technical analysis showing perfect storm conditions, and why the next few weeks could be absolutely critical for XRP holders. Today's top story: the SEC just recognized a leveraged XRP ETF that could change everything we know about institutional crypto adoption. This isn't your typical spot ETF filing. This one comes with leverage and income components that have Wall Street written all over it. Before we dive deep into this breaking news, smash that like button if you're excited about XRP's institutional adoption journey. And don't forget to subscribe and hit the bell for daily crypto updates that could impact your portfolio. Let's start with the bombshell that's got the entire XRP community buzzing. According to analysis shared by Diana on social media, the SEC has just officially recognized a leveraged and income XRP ETF filing. This isn't just another standard ETF application. We're looking at something that could fundamentally change how institutions interact with XRP. So what exactly makes this filing so different? First, let's break down what leveraged means for those who might be new to traditional finance. A leveraged ETF essentially amplifies your exposure to an asset's price movements. If XRP goes up 10%, a 2x leveraged ETF might go up 20%. But here's the flip side. Losses get amplified too, making these products both high reward and high risk. The income component is equally fascinating. Traditional ETFs just track price movements, but this filing suggests investors could earn yield while holding leveraged XRP exposure. This positions XRP not just as a speculative crypto asset, but as what Wall Street would consider a legitimate income-generating investment vehicle. What's really significant here is that this filing has been entered into the SEC's official system under Tidal Trust II. This isn't some speculative filing that might get rejected outright. It's following proper regulatory channels and getting formal recognition. Here's my take on why this matters so much. We've seen how spot Bitcoin and Ethereum ETFs completely transformed institutional adoption for those assets. But a leveraged ETF? That's taking things to an entirely different level. This suggests that major financial institutions aren't just looking to offer XRP exposure. They want to offer amplified XRP exposure to clients who are bullish on its long-term prospects. The timing is also crucial. With multiple standard XRP ETF filings already in the pipeline, adding leverage products to the mix creates a comprehensive suite of institutional XRP investment vehicles. This isn't retail speculation anymore. This is Wall Street infrastructure. Speaking of perfect timing, let's dive into some fascinating historical analysis that suggests we might be witnessing the calm before a major storm. A prominent crypto analyst has shared compelling data about XRP's seasonal patterns and why September could be the last opportunity to accumulate at current levels. The numbers here are absolutely stunning. According to this historical analysis, XRP has averaged a 147% gain during Q4 across multiple years, with some legendary performances including a 1,064% explosion in 2017 and a 240% surge in 2024. But here's what's really interesting. September typically sees minimal price movement, with a median performance of just negative 0.32%. This sideways action often precedes the explosive Q4 movements we've seen historically. Now let's talk about the catalyst that could trigger the next major move. Between October 18th and 25th, we're looking at 7 major XRP ETF decisions in just 8 days. We're talking about applications from Grayscale 21 Shares, Bitwise, Canary Capital, Wisdom Tree, Franklin Templeton, and CoinShares. Bloomberg analysts are putting the approval probability at 95%. With expected institutional inflows ranging from $4.3 billion to $8.4 billion. The network fundamentals are also supporting this bullish thesis. XRP Ledger has recorded a 500% surge in transactions, processing 844 million tokens with over 1.5 million daily transactions. What's particularly impressive is that 60% of this network activity represents real payments, not just speculation. What strikes me most about this analysis is how it connects historical patterns with fundamental developments. Previous XRP bull runs were largely driven by retail speculation, but this cycle appears to be driven by institutional infrastructure development. The $1.3 trillion in cross-border volume processed in 2025 isn't hype, it's real utility. When you combine that level of fundamental adoption with the potential for massive institutional inflows through ETF approvals, you start to understand why some analysts are calling September the last discount opportunity. This ties into another crucial development that often gets overlooked in price speculation: XRP's role in the fundamental infrastructure of global finance. A well-known crypto trader recently pointed out that XRP isn't just participating in the new global financial system, it's helping to build it. ISO 20022 represents the new messaging standard for global financial transactions, and XRP's positioning at its core isn't accidental. Ripple didn't just join this standard, they actively participated in writing the rulebook. This means XRP is embedded in the very foundation of how banks and financial institutions will communicate and settle transactions in the future. The shift from experimentation to implementation is becoming increasingly clear. We're seeing over 300 banks now using Ripple's on-demand liquidity services, and RLUSD stablecoin has completed $300 million in tokenization. These aren't pilot programs anymore. They're live operational systems processing real value. This infrastructure play is what separates XRP from many other cryptocurrencies still fighting for regulatory clarity and use cases. While others are building speculative ecosystems, XRP is becoming integral to the plumbing of global finance. That's not just bullish for price. It's bullish for long-term survival and relevance in an increasingly competitive crypto landscape. Now let's shift to the technical side of things, because the charts are telling an equally compelling story about where XRP might be headed next. According to technical analysis shared by Bobby A., XRP's monthly chart is constructing what's called a bullish flag pattern after breaking out of a 7-year consolidation period. For those unfamiliar with technical analysis, a bullish flag typically represents a brief pause in an uptrend before the next leg higher. What's particularly interesting is the observation that there's no euphoria detected in current price action. This is actually bullish from a contrarian perspective. The biggest moves often happen when sentiment is neutral rather than when everyone's already excited. The analysis suggests XRP is preparing to enter its parabolic blow-off phase, potentially printing a second confirmation peak into overbought territory on the relative strength index, similar to what we saw in 2018. Looking at shorter timeframes, we're seeing some fascinating technical developments that could provide early signals for the larger moves we've been discussing. According to detailed technical analysis from Cassie Trades, XRP is currently holding a consolidation pattern with a breakout looking increasingly imminent. The price action is tightening toward what technicians call the apex, basically the point where the consolidating triangle pattern has to resolve one way or the other. The key levels to watch are $2.99 as the critical support level, representing the 0.382 Fibonacci retracement, and $3.08 as the breakout confirmation level. The analyst notes that XRP recently tested the bottom trend line of its consolidation and showed a strong reaction back to the top, which actually strengthens the overall pattern. On the 4-hour time frame, the relative strength index is building what appears to be a bullish trend, supporting the idea that this consolidation period is accumulation rather than distribution. What I find interesting about this short-term analysis is how it aligns with the longer-term fundamental developments we've discussed. Markets often build these tight consolidation patterns before major news catalysts, and with multiple ETF decisions just weeks away, the timing feels significant. The idea that the market is compressing energy resonates with me. Sometimes the best moves happen when everyone's waiting for something to happen, and then it finally does. All right, crypto family, let's wrap up today's key takeaways. We've got a leveraged XRP ETF officially recognized by the SEC, historical patterns suggesting Q4 could be explosive, fundamental infrastructure development through ISO 20022, and technical charts showing consolidation patterns that often precede major moves. The convergence of all these factors, institutional products, regulatory clarity, fundamental adoption, and technical setups, creates what I'd call a perfect storm scenario for XRP. We're looking at potential catalysts spanning from October 18th through 25th that could determine the trajectory for the rest of the year. What do you think about these developments? Are you positioning for a potential Q4 XRP rally, or are you waiting for more confirmation? Drop your thoughts in the comments below. I read every single one and love hearing your perspectives. Tomorrow, we'll be diving into Bitcoin's reaction to the latest Federal Reserve signals and what it might mean for the broader crypto market heading into the final quarter of 2025. You won't want to miss that analysis. If you found today's XRP analysis helpful, smash that like button, subscribe if you haven't already, and hit the bell for daily crypto updates that could impact your portfolio decisions. Remember, this is not financial advice. Always do your own research and never invest more than you can afford to lose. Until tomorrow, keep stacking and stay informed, crypto family.